Morning, Steve Free in Chicago with the morning grain comments. Well, it's the quiet before the storm. I think that tomorrow USDA's report on acres and stocks may have some volatile reaction. Right now, the USDA estimated last year that we planted 225.3 million total corn, bean, and wheat acres. The average guess is 224.5 for this year. So will the farmers plant less acres? Sometimes when you have such a drop in prices, farmers tend to plant at least the same amount of acres or maybe more acres to try to compensate for the lower prices. They could cut back on costs, but they could actually increase the acres. It's interesting to note that in 14 of the last 20 years, assuming normal weather, corn plantings have gone up from the March intentions to June. In 6 of the last 10 years, soybean acres have gone up from the March intentions to the June. So, the market might filter in tomorrow that whatever the government says, final acres could be a little bit higher. Prices, right now we've got beans down a couple of cents, wheat down a penny, and corn unchanged. Outside markets, most things are higher. U.S. stocks, crude, most commodities. There is talk that better currencies in the emerging markets might be suggesting their economies are improving, and that could be helping commodity prices. On the rally yesterday, U.S. farmer were selling of corn and beans. Brazil farmer sold some beans, and Argentina picked up their selling of beans as their harvest progresses. Option volatility was up 2% in wheat yesterday, 3% in corn, and we noted that there's large new option buying in corn from one particular fund. Canola prices were helped by China delaying their new import standards. Some people question the quality of the China canola reserve stocks, and that might be why they're delaying any new standards on Canada imports. Palm oil futures saw some profit taking on some concern over the China export demand, but India continues to buy more veg oil than they did a year ago. The Delta rains could slow corn plantings there. There is talk that as much as 1 million to maybe 1.5 million corn acres could be switched to soybeans. Funds yesterday buyers of beans, meal, oil, and corn, and wheat. They continue to be long beans, short meal, long a record amount of oil, short corn, and short wheat. Midwest forecast 6 to 10 day calls for above normal temps, normal to below rains. The 8 to 14 day also calls for normal to above temps and normal rains. I think one of the reasons we had a rally yesterday was one private forecaster suggesting that if we go to La Nina, we could see a little bit drier and warmer summer, especially in the plains through the western part of the Corn Belt and up into the northern plains. This morning we had one more weather person that suggested that July and August U.S. Midwest weather could be warmer and drier than normal. So that's a wild card as far as grain prices are concerned. I still think the month of May is going to be extremely volatile for the grains as we decide what kind of crop we're going to have in 2016. So we're gearing up for tomorrow's USDA report. We'll be on with a video after the report, talk about market reaction, and then we'll start trading weather. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.
I was thinking if it